Hey, have you always wanted to find trades that go to the target almost the same day or maximum next day? And you always wanted to have a high risk to reward ratio? This is what explosive patterns using the Target 5X will help you achieve. So let me explain to you about the pattern and how to find it. So first, what are the benefits of using the explosive pattern using the Target 5X? And why you should learn how to trade this pattern? It has a very high risk to reward ratio. It has a very high win rate. It's a very objective system, so you don't have to be like guessing. It's a set and forget. So once you find the pattern and you enter the trade, you just put the stop loss and the target and leave it there, and it will go to the completion automatically. And it's fast to go to the target, so you don't have to wait a long time. It can go to the target the same day or the next day. So it's fast to go to the target, and it presents itself almost every day. You will always find opportunities to trade this pattern. Also, very important thing is that it's prop firm friendly, which means you can use it on any prop firm you want, and there's no restrictions using this strategy. Now, what is the Target 5X indicator first? Now, as you can see here, the Target 5X indicator is a set of boxes and lines. Now, this is calculated using a mathematical formula, and it's a leading indicator. So it's based on price action, and it will never repaint during the trading session that you are going to be trading. So this is a very easy to use system, and it's very easy to find the trades. All you have to do is learn it properly and use it properly. Now, as you will see on the chart, there will be control buttons which will help you control which boxes or levels you want them to appear. So you will have like the middle line, target level, sell zone, buy zone. And as you can see, you can just click on the bottom to make it appear or disappear. Okay. Now, the first thing we have to know about the explosive pattern is we have to know that it's based on finding price action that goes into these boxes in a specific manner. So there's a specific manner that it should go into these boxes. So when we want to buy, we want to have, for example, this is the bullish pattern. What you will see a harmonic pattern, a bearish harmonic pattern, which is the red one. It will end near the middle line, as you can see here, and then it will go down and break all the lows of the harmonic pattern and go into the box, as you can see. Now for the bearish pattern, it's the opposite. What you will see a bullish harmonic pattern that ends near the middle line and then goes into the selling box, which is the sell zone, and breaks all the highs of the harmonic pattern that has been formed. So it will break the highs, go into the sell zone, and then this is a bearish pattern that we will be looking to sell. Now, how do we take a trade? First, you have to note something important: which pairs you have to trade. So this system divides the pairs into three main sessions. You will have the Asian session, you will have the EU session. Now the London session and the EU session here are going to be the same. And you have the US session. Now during each session we will be trading specific currencies. So in the Asian session, we will be interested in trading the AUD, New Zealand, and yen pairs. In the EU session, we will be trading the euro, the Swiss, and the pound pairs. And in the US session, we will be trading the US and the Canadian pairs. Now, these pairs can have currencies from different sessions, but they should have a currency from that session. So for example, in the Asian session, we can trade the Euro AUD, Pound AUD, Euro Yen, Pound Yen, AUD Yen, New Zealand Yen, as you can see on the chart. Also in the EU session or the London session, we can trade Euro AUD, GBP AUD, Euro Yen, GBP JPY. So we can use currencies from different sessions as long as there is a currency from the session that we should be trading. And the very important rule you have to remember is we only trade the first 3 hours of every session. So for example, the Asian session, based on IC markets, for example, it's traded from 2 to 5. So we look at the server time that is used by the broker. So in the EU session here, we trade from 9 to 12 according to IC markets. And in the US session, we trade from 15 to 18 according to the US session. Okay. Now, what are the trading rules? First, we trade using the 15-minute time frame. The second thing, we have to look for the harmonic pattern for direction as explained before. So we always look for a reversal trade, but the harmonic will give us the final impulse. So if we want to sell, we look for a bullish harmonic. If we want to buy, we look for a bearish harmonic on the 15-minute chart. Now, the box for entry, the price should go into the box, the entry box, or it should reach the target. So sometimes it might have some price action before the session time window that we want to trade, and then it reaches the target, the buy target or the sell target, or it enters into the box. These are the two things that we are interested in. The other thing is we want to make sure that there's a divergence signal. Now, there will be a signal on the chart to indicate divergence, or it should have a TDI cloud piercing, which is an indicator also included in the template, and you will see it in the examples following now. Now, we will always look for a reversal candle to enter the trade. Now, most of the time, this reversal candle is an engulfing candle, and I will explain what's an engulfing candle in the charts that come next. Also, we have to remember that we always enter during the time window we will trade, which I explained in the sessions. And the stop loss will be the candle high or low. So we will always use the entry candle on the 15 minutes, high or low, as our stop loss. And our target buy or sell is the buy and sell target, which is also indicated by the Target5X indicator. Now, the minimum, we will be trading a 5x, which means like we will be having a trade which has a target 5 times the risk, at least. Sometimes it can be even more. So sometimes you can have like trades which are 10 times the risk. And always remember this very important rule. Once we take the trade, we have to just set and forget. We take the trade and we just don't look at it again. Either it will hit the stop loss or it will go to the target. We don't monitor the trades during their completion, because if you will monitor trades, you will never be able to get to the target. You will always find some reason to panic and get out of the trade before it hits the target. Now, if you want to move a stop loss to break even at certain levels, you might do that, but it's not very advisable to do things that can hinder the trade from reaching the target. Okay, so since we have like very good and very high risk to reward ratio, we should always be fine. And we only take trades with a minimum of risk to reward ratio of 5x. Okay, we don't take trades which have less than that. So let's take some examples. This is, for example, a trade on the EuroCAD. As you can see here, the harmonic pattern, it formed near to the middle line, as you can see, and then it went up. This is the harmonic pattern. It went up, and this is a EuroCAD. So the CAD is a US session currency. So as you can see, we will be only interested in selling. So this is why we switch off the buy zone. We don't want it. So it went up. It gave us the entry in the US session. And this was the engulfing candle that we were looking for. You see, there was like a very strong candle. And first also, this is the TDI. So the TDI, it pierced the envelope. So this confirmed for us that we reached the target to start looking for the reversal. So once we get the target, once we get the reversal entry, which you can see here, then we will enter at the close of the candle with a stop loss at the high of the candle. And as you can see, it reached the target very nicely. So just set and forget. And most of the time you will reach a target during the same session, and many times it will be during the next session. So the maximum we will be holding a trade is either during the same day or the next day. That's it. So this is another example. This is using, this was the Euro US dollar. So as you can see here, it went down to the target. We had a bearish harmonic pattern. And since we have a bearish harmonic pattern, we switched the sell zone to off because we are only interested in buying now. And it went down. It pierced the TDI, and this happened during the European session. So we also had the reversal candle, and it was engulfing, which means it closed above the high of the previous candle, as you can see. And it happened as we entered the box and exited from the box. So our entry would be the close of the candle. Our stop loss is the low of the candle, and our target would be the target of the buy signal. So this is an example how it's traded. Okay. Now this is the New Zealand USD. As you can see here, the New Zealand USD also gave us a signal here. Now this is important to note. The buy signal on the New Zealand USD, it happened after the first 3 hours of the Asian session. So we will not be entering the trade here because it happened, the buy signal, as you can see it happened after the 3 hours. So the 3-hour rules was not respected here. However, since it's a New Zealand USD and we would be also interested in trading it during the US session. So during the US session, we had the price nearly at the same level. So nearly at the same level, we also had the same price, and we would be able to get into this trade at the same price with the same risk to reward. So we would enter at the close of the candle. As you can see, it tried to break the bottom of the box, but it couldn't, and then directly gave us a reversal candle, which we can take. And also there was a divergence in the TDI, as you can see here. So there were lots of confirmations that this is a very good trade. So we will take this trade, and then our target would be the buy target. And as we said, it's set and forget, so we don't have to monitor. So the price action on the next day at the beginning and the middle of the day was very like sideways, but we shouldn't be monitoring it. So we should just leave it and let it go to the target as it happened at the end of that day. So this would have been also a very nice trade. Now this is another explosive pattern on the Euro USD. Now, as you can see here, we had the harmonic pattern. It broke the lows of the harmonic pattern, and it went down into the box. However, it went down into the box, and it did not form a buy signal during the European session. However, it reached the target. As you can see, there was like the sell target. It reached the sell target and it formed a divergence. Now, this divergence was formed before the US session started and after the 3 hours of the first 3 hours in the European session. So we would not be trading the first signal. However, if you look at the second signal, what happened is the following. We had also a divergence into TDI, and at the same time, we had a engulfing candle, as you can see, that happened from the sell level, sell target level, and we could have entered this, and using the same rules, the low of the candle would be the stop loss and our target would be the buy target of the chart. Okay, so this is practically the explosive pattern. If you have any questions, you can comment them in the below this video in the comments section and ask anything you want. Now, if you want to download this system, also you will find the links in the description below. So this is the pattern, and you can also use the links on this page to get this system. So this system is based on a very simple statement, which is trade what you see and not what you think will happen in the market. So it's a very simple system to trade. It's a very profitable system to trade. You just need to master it, and it's very easy to learn it. Okay, take care. Bye bye.